Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trading setup and the market strategies you need to follow for this fresh and new week. Remember, the Nifty is at a one-month low. It registered fourth consecutive weekly decline as of Friday, slipping for the longest losing streak that we've seen in 2025. Now, four straight weeks of losses have been seen for the first time since October of 2024 as well. Remember, the Sensex and the Nifty slipped by about 0.5% each, and the Nifty Bank, however, gained about 0.5%. We also did see 35 Nifty stocks giving negative returns this week as well. Now, what's in for this new week? US markets. Well, US equities continued to rally to record high levels even on Friday. We've seen the S&P 500 already closing in at 14th time, an all-time high level this year. Now, what we've also seen is that when we look at the kind of moves that we are seeing from the foreign investors, it's again on the negative side. On Friday again, there was a net sell of 1979 crore rupees in equities from FIIs, DIs. However, net bought shares worth about 2,138 crore rupees as well. More and more cues coming in from the US over the weekend as well. We did see that US and the European Union have announced a trade deal as on Sunday. 15% across the board tariff on European exports into the US will be what the market will be incurring, and this is including the automobile segment as well. Remember, European Union has agreed to new purchases of energy and military equipment from the US as part of the deal. Now, apart from the EU deal, we'll also see that China and the US deal will also, and the talks will also continue. China and US, meanwhile, have also indicated that they will be pausing the tariffs for another 90 days till the time more talks are on. And, we are also given to understand that the US Treasury Secretary, Scott Bessent, will meet Chinese counterparts between today and tomorrow. So it will be a busy US week ahead of the FOMC meeting on Wednesday as well. Large part of the expectation is that this time around as well, we may not see a rate cut, but let's see how that pans out as well. Asian markets have been trading mixed this morning. And that's ahead of the US-China trade talks in Stockholm today. China's oil purchase from Russia and Iran will also be discussed in the talks. That's another one. So Nikkei and the Kospi are down in trade, whereas China, Hang Seng both are higher. GIFT Nifty is indicating a flat opening at 24,846. That's something that we will also keep a keen eye out on. Let's welcome our guest on board. We are now joined by Mr. Avinash Gorakshakar, and he's joining in on the program with us to share with us his views on the markets. Warm welcome to you, Avinash, thank you so much for taking the time out. I want to first begin by understanding from you on the tariff and the trade talks that are continuing over the weekend. Now, EU is the next one to strike a deal with the US, 15% of a tariff coming in, including the automobile segment. What are your key takeaways for that? China talks continue, and what we are given to understand as far as India is concerned, some of the news reports have mentioned that probably we may see an interim deal. It's not ruled out before August 1. However, all the points will still need to be discussed even beyond the August 1 deadline as well. So how is your own thought process around the new talks and the new deals that are being signed, sir?
Yeah, good morning, Sakshi. I think clearly, the US trade deal deadline, that is 1st of August, US has clearly indicated that they will not be extending the deadline. And typically, I think, the pain points for us are basically agriculture and dairy related products, where I think some negotiations are still continuing, going on. But I think overall, looking at the kind of tariff structure for Europe, that is for EU, I think clearly India also is going to get a very good sweeter deal. And I think India is a market which US cannot ignore, and to that extent, I think we should be able to negotiate a better kind of US, India trade deal kind of, agreement. Most importantly, sectors like pharma, IT, which are very much dependent on the US market. I think that is something the market should specifically look at. Textiles has already benefited because there's been a high duty structure for countries like Bangladesh. So typically, Indian textile companies should benefit. But I think overall, IT and pharma, as well as even the auto component sectors are typically, areas where the market should see, sector-specific benefits coming to them. So net, I think, the markets is in waiting mode, and that's the reason the markets are not going up or going down. But the key, macro event in the US also would be the FOMC policy. I think most market observers are expecting that rates will be, held on, and I think the commentary on inflation, the commentary on rising prices would be very critical to hear. So I think for the Indian markets, I think unless and until we get a very big negative surprise, I don't think the markets are unlikely to fall from these levels. We've already seen a very slow market. The only pain point in the near term is the FI selling, which has been continuously going on, and that is something which is little worrisome. But I think domestic institutions are doing their bit. SIP flows have been pretty strong. So I think net, it's a stock picking market. The current earning season has been going on. So I think one has to focus more on a stock specific approach rather than an index based approach.
Okay, got that. When we talk about the European Union trade deal, one of the key stocks that's also going to be in focus yet again is Tata Motors. Tata Motors has been seen as a front line of an impact being seen when the Japan deal was also struck with the US, even when India and UK FTA was signed, and now with US and EU trade deal also taking place as well, especially when it comes to the JLR component and the JLR vertical of the company. How do you expect Tata Motors to get impacted, and what is the impact on some of the other larger auto ancillary pack stocks that have an exposure to the EU as well, sir?
No, I think see the duty structure for EU at 15% tariff is something which is something which I feel looks reasonable, because earlier there were expectations that the rate would be much higher.
Yes.
And most importantly, I think the JLR business, as you rightly pointed out, has a very large exposure in Europe, in US. So typically, Tata Motors definitely should get a sentimentally good positive opening today. The stock has beaten down quite badly. I think the demerger of the JLR business is also on the cards. So this also will obviously aid the movement for the stock to go upwards in the near term. And other companies which possibly have a large exposure are companies like Sundaram Partners, Samvardhana Motherson, which have got large exposure to both Europe as well as the US. And large auto component players like Bharat Forge, which has got a very large exposure to the US market. They are the second or third largest player in the axle market depth to the Class 8 trucks category. So my sense is that you could see a little bit of easing and a little bit of sentimental booster for these stocks, considering the fact that the tariff rate has not been so severe as what it was earlier anticipated.
Okay, fair point. So that's the view as far as the tariff talk is concerned. FOMC, sir, you did point out it's going to be the next big trigger for all of us to watch out for. Rate cut, is that ruled out even for this FOMC meeting on Wednesday, sir?
No, I think that's the broader consensus, Sakshi, because I think Powell, the Fed governor, has clearly indicated that unless data points clearly indicate that inflation is easing, they would go purely by the data metrics. And to that extent, I think the market is not penciling in any rate cut as of now. But the commentary from the Fed governor is very critical, and I think markets would obviously get a hint as to what kind of rate cut scenario could come in maybe over the next couple of quarters. So till as of now, it should be a status quo.
At this point in time, let me quickly look at the Nifty. It's a flat opening for the Nifty as well, 24,842, something that the GIFT Nifty was already getting an indication of as well. Let me also just talk about a few more aspects that we'll be watching out for. Let's look at the IT stocks. Those are the first ones that will be important to watch out for as a micro indicator of what is happening back home in India. Starting with TCS is something that I want to see. 24,837 on the Nifty. But let's see how the stock is moving. Not yet ticked on the pre-open trade. Let's try to wait it out. But TCS is going to be in focus because as of yesterday, the news that has come in has been extremely big to track and has been trending wide on social media platforms as well. Now TCS is going to be cutting its workforce by 2%. That will impact 12,000 people or employees of TCS globally, largely from the mid-level and the senior level employees, as these layoffs will occur over the next 12 months, as has been indicated by the company at large as well. Now, the company's clear rationale has been they want to be future ready. Is it an impact of AI? They say it's not a direct impact of AI, but more about how they need more upskilled, more talented people to do the work at this point in time, and they want more agile people. It is not an AI-driven redundancy. Let's try and understand that a little bit. Mr. Gorakshakar, since yesterday, There's been so much of discussion on social media on TCS cutting a 2% workforce. Now, remember, we've already seen in the recent last couple of days and weeks that the company was again in focus because of deferring the kind of letters that they had sent out to freshers for joining as well. That was one impact, and now they're clearly talking about layoffs to occur. Before that, around the results, they clearly talked about how they want to even defer the wage hikes as well. What does all of it really point out to when it comes to TCS?
No, I think Sakshi clearly, I think whatever reasons the management of TCS has given, I think the bottom line is that they have decided to cut their workforce by 2%. Around 12,000 people, as you mentioned, are going to be impacted directly. I think it clearly indicates that there's a solid, kind of margin pressure, and there's a solid cost pressure on the company as of now. And I think any company which decides to cut workforce by 1% or 2% clearly knows that at least for the next 2 to 3 quarters, things are not going to change dramatically. So it may not be an event driven by AI, but I think the business conditions in the IT space abroad have become very, very competitive. And obviously, the company has to rejig its cost to ensure that its margins are maintained. So I think overall, next 2 3 quarters are also going to be equally challenging. And I would not be surprised that you could see a little more cut on the stock price once we go ahead, because clearly this is not a good beginning. And I think, if one or two other IT companies, the larger players, also announces these kind of wage cuts, then I think it could be a very significant development for the sector. But I think TCS should trend lower today. And I think unless and until the market gets convinced that the next couple of quarters growth is going to come in, which looks very unlikely, I think the stock is going to be largely an underperformer.
Absolutely. And, you're right in pointing out to finding out that, whether when the largest company in the sector talks about such a large layoff in open, talking about being future ready and agile, what happens to the rest of the pack as well will also be important to see. Right now, there's a 0.5% downtick on TCS at 31.18. That's the level at which TCS is trading at in the pre-open trade. But as we also know that even global tech giants in 2025 have been on a layoff spree as well. We've seen with Intel, Microsoft, even Meta and many more cutting the jobs, and now TCS is the first one to talk about a mass layoff over the next 12 months when it comes to cutting jobs at this point in time. Do you expect more and more companies to succumb to this? What is the larger understanding from the entire sector, and where is the IT sector headed when such issues are being talked about, sir?
No, I think clearly, companies which are into large scale IT services clearly are going to be hit more badly compared to niche players which are there in machine learning, artificial intelligence, or product based software companies, typically the SaaS companies. So I think, if you leave alone these segments, I think the broader market is going to face a lot of pressure. I think companies like Infosys, HCL Technologies, typically, of course, TCS, which I mentioned earlier, are all large companies, which have got largely, IT services as their main kind of vertical. And it's a long time before they could get into precise, niche verticals like artificial intelligence or machine learning, or typically a product-based kind of SaaS platform. So I think, it's going to be a tough road ahead, Sakshi. I would not be surprised that other players also, maybe not this quarter, but maybe the coming quarters, could also announce wage cuts, and that definitely is going to be a little difficult for the larger companies. The smaller companies, which are more leaner, companies like Persistent, KPIT, companies like Intellect Design, these are companies which are largely more leaner, and I think there the market possibly get a better leg up.
For investors, sir, what is the approach that they must have on the IT sector? Is it a no-go area for now, since you do say that there could be, persistent issues with the entire sector over the next 1 or 2 quarters as well? So if that has to be kept on watch, what is the medium to long-term strategy on IT that one should adopt?
No, I think, see, whatever growth comes in for the IT sector, it should come in only post September. I think now on the 1st of August, we have the US-India trade deal, which hopefully, will give some clarity, because there are a lot of orders which are there in the pipeline, which are yet not come to the Indian companies. And US being the mother market, obviously, most of the Indian IT companies are also waiting. So my sense is that, there's no need to hurry to buy these stocks as of now, although valuations wise, these are attractive. But I think the growth quotient, Sakshi, is something which possibly post September we could see, if at all, things improve for the better. But I think as of now, no fresh buying advisable on the IT sector currently.
Okay, got that. No fresh buying. That is clearly a viewpoint that is being shared by all our viewers. Let's shift focus from the IT to the banking space as well. A lot of banking, stocks will be in focus on the back of the earnings that are coming in and have come in as well. Now, over the weekend, we've been seeing some sort of weakness again in the banking results. Asset quality, credit cost issues are showing up along with NIM compression as well. Now, for Kotak Mahindra Bank, let's start off with that one. One of the ones that was remaining to put out its numbers has also put out here. The provision and the credit costs have also surged. NIMs have fallen more than expected again, and therefore you see a 4.5% drop on Kotak Mahindra Bank in trade today. Bank of Baroda, again we have seen the net interest income falling this time. There is also a surge in provisions. There is also a slight increase in the credit costs and the slippages as well. So from the PSU banking space also that continues. Now Shriram Finance again on target. Provisions and credit costs also fell. AUM growth came in at nearly 17% odd. SBI cards, we've seen the credit cost at a 16-quarter high. So from the banking large space, the earnings that are coming in, sir, what is your biggest takeaway? Look at SBI cards, again a 6.5% kind of a drop it is being shown in the pre-open trade at least.
So I think performance from both the private sector banks and the PSU banks have been very disappointing. And I think to a large extent, that shows that the broader pain in the economy continues. And I think, if you see the commentary from large players like Bajaj Finance, they have also indicated some pain in the, in the MSME segment. Typically, they have a doctor's portfolio, which actually has shown some sort of signs of stress. So I think, when large players talk about stress, Sakshi, I think you need to be careful. If you look at Bank of Baroda, again, slippages have increased, profits have dropped. If you look at Kotak Bank, which was considered to be a bellwether, and I think if you see the numbers, very disappointing numbers, the profits are more or less flattish. And I think, the markets are definitely not going to like these numbers. So I think unless and until we see a good credit offtake and a credit growth kind of momentum, at least in the second half of this financial year, banking may remain sideways. So, except ICICI Bank, I think none of the private sector banks have also done well. So I think we'll have to be very cautious and selective. I think the move upwards is going to take a little longer than expected.
Okay, got that. Vis-a-vis the numbers that have just been discussed with you, sir, that have come in over the weekend, and HDFC Bank and ICICI Bank, what is the top reading there, sir? We did see both the banks, shoot up to record high levels post earnings, continuing to support the sentiments around Nifty Bank as well. Both reported decent set of numbers this time around. So how is the understanding between what has been reported over the weekend in Kotak Mahindra Bank and some of the other PSU leaders? Whereas when we look at what has happened with HDFC Bank and ICICI?
So I think HDFC Bank, the numbers were slightly better, largely because of sale from the SDB's public issue. But otherwise, provisions have gone up. See, that's the bigger worry for the bank, and I think markets were a little cautious on the sharp increase in provisions also. So I think HDFC Bank, if you look at it as a comparison to ICICI Bank, I think they have done a reasonably good show in a very challenging environment. So ICICI Bank, not only the core business, but even the other business like asset management, the broking business, the insurance business, I think numbers have been much better than what the street expected. And I think public sector banks definitely have underperformed. I think that explains the valuation discount which they get, as compared to the private sector banks. Bank of Baroda, again, a very disappointing set of numbers. One number which came out slightly better and was slightly in line was Canara Bank. Numbers have been slightly better than most of the other PSU banks. But net, I think the markets are still looking at a stronger credit growth offtake, and the number has now come down to something like 6-7%, which earlier 3-4 quarters back was in double digits. So I think unless this kicks in and some sort of normalcy comes in the MSME sector, private corporate capex happens, you're not going to see a runaway rally in the banking stocks, especially now with large players like Bajaj Finance talking about pain in the MSME sector. That is definitely a sign of warning, and we need to monitor that carefully.
Okay. One more, question on the banking space, and then we will move on to the other aspects. IndusInd Bank comes out with its numbers today. Now, of course, as investors, we are watching out for what is the kind of dent that there could be on the profitability. There is a large expectation from the street that as much as 85% of a drop in Q1 profits is what we could see. Net interest income is expected to decline by about 20% as per some of the brokers. Credit costs, asset quality may again remain as a key concern. And of course, we are going to be understanding from the management commentary that will be very important to watch out for after the recent troubles that have come out. How much of that is already in the price, how much of that has already been tackled, and what part still remains to be seen in the upcoming quarters. Mr. Gorakshakar, how are you looking at IndusInd Bank, sir, after the recent troublesome quarter has gone by?
No, I think IndusInd Bank will continue to struggle at least for the next 2 to 3 quarters, and I think it's
Okay.
not easy for them to come out because see the environment itself is now so challenging that well-established players have reported either flat or negative kind of growth in their bottom lines. Although one good part is that most of the banks' the asset quality is good, so that's the bigger positive in this quarterly period. But I think as far as IndusInd Bank is concerned, I think the market would look at the asset quality, what are the kind of provisions they have made, and I think going forward, this is a area where I think the maximum amount of questioning will happen from the analysts. So I would say that profitability is going to be down, but more important is the asset quality. Any elevation in the asset quality will be taken more negatively, and the stock is definitely not looking attractive. I would say that it's better to stay little away from it for at least a couple of quarters and wait for the management commentary. That would give a better idea as to what the management's thinking is, for this financial year.
Fair point. Okay. We'll also welcome Ms. Vaishali Parekh now. She's the Vice President of Technical Research and Analysis at Prabhudas Leeladhar, and she's also joining in on the program with us. Warm welcome. Good morning to you, Vaishali. Good to have you. Tell us first on IndusInd Bank, since that was our key discussion before you just joined in. How are you looking at that? Today the earnings come in. We've seen how recent few months have been extremely volatile for the company, financial struggles and fraud that occurred, discrepancies that have occurred have clearly been called out by the company, and impact was seen in the previous one. And now, slowly and gradually, the company is trying, or the stock is trying to find its feet above the ground. What exactly would your approach be on the stock?
Very good morning, Sakshi, and to you too. I would say that, IndusInd Bank is definitely struggling, but chartically, I would say, it made a recent low at around 500, 640 levels or so. And from there on, it has been under a long consolidation. So if my view goes right, I think even if the results are poor, I think the worst is factored in. But having said that, I would still say purely on technical terms, 800 to 780 is the good support band. If that is held on, I think this stock is ready to go towards 950,000 levels as a bounce back. So for now, I would expect a narrow range of 780 to 950 levels.
Okay, and on the markets, what's your key expectation on the markets today and for the week, and what are you watching out for?
So I would say, market is showing some signs of corrective move. So 24,600 looks likely on Nifty, and Bank Nifty we'll have to wait. I think it's still a stronger sector compared to the other. So 56,000 should be held on.
Okay, got that. Let's quickly look at the markets. 24,760 is the level at which the Nifty is trading at. So we've given up 24,800 right at the beginning of the edition today, and the market beginning today 70 points lower in trade. So it's a weak start for the markets. All the sectors barring just slight gains on pharma, FMCG and slight bit of gains on the auto pack. Rest of the sectors are all down. It's private banks that are down by 0.9%. The real estate stocks also down by over 1%. The Nifty Bank is down by about half a percent, underperforming the Nifty at this point in time. Even the IT sector is down by over 1% is what is being seen right now. Let me also pull up some of the stocks that are holding up in this market despite the overall benchmark starting lower. Tata Motors 1.7% higher. We were just discussing that it's trading at 699 levels. Cipla is another one. Brokerage houses Focus 0.3% higher. Bajaj Auto, Ultratech Cement, Bajaj Finserv are the other stocks that are holding up. Kotak Mahindra Bank is the top laggard after the earnings, 5% lower. Wipro is down 3%. TCS, after that news of 2% of a workforce being slashed over the next 1 year, 1.5% down at 3,093. Infosys is also down. So at least among the top 5 laggards, at least 3 of them are from the IT pack. But what's still holding up on the IT space, in the F&O space, is Emphasis after the earnings, 2% higher. Bank of India, Poonawalla Fincorp and Tata Motors are some of the gainers at this point. We'll come to Vaishali to talk about the clear moves, but let me go across to Mr. Avinash Korakshakar to understand some more about what can be in focus. Real estate play for you, Avinashji. How are you looking at Lodha developers, Sobha, some of these numbers that have come in for you, and of course real estate sector as a whole? What does it bring to you, sir?
So I think real estate sector continues to be a good attractive bet. I think for the medium to long term. I think one good part about the real estate piece is that inventories are still selling. There has been no compression in demand, especially in the prime metro kind of areas. And most importantly, both residential and commercial properties are selling pretty well. I think if you look at the commentary from Soba as well as I think if you look at Loda, I think they operate largely in the Bombay market. Prices have been held steady, and with the two rate cuts having coming in, I think some sense of price stability for the customers is also coming in. So I think from a longer term perspective, if you do get a correction in these companies, then I think Loda, DLF, or maybe for that reason even companies like Oberoi Realities could be decent bets for the medium to long term.
Okay, got that. Avinash apart from this, I'm also going to be focusing on the capital market story with you. This one is on CDSL. The earnings highlights have come in. The company is also in focus because this week we will get to see NSDL's IPO also coming in. So we'll talk about that space as well. CDSL, I'm just going to highlight for all our viewers. This has been one of the very closely tracked stocks within the capital market story by a lot of retail investors and analysts as well. 56 plus lakh new demat accounts have been opened in the first quarter of FY26. Total demat accounts have now crossed 15.86 crores as of June 30th. Revenue is up by about 0.5% only at 258 odd crore rupees. EBITDA is down by 15.5%. Margins have come in sharply lower at about 50.4%, versus 60%. Net profit is down by 23.7% at 102 odd crore rupees as well. So that's the earnings aspect, and of course CDSL is in focus ahead of the NSDL IPO too. Now for NSDL also, what we are given to understand is that the price band that has come in and the valuations that are also being seen at this point are indicating lower than what was being seen in the grey market or the usually tracked market by a lot of traders and investors, but of course it's the unofficial market. Your sense, sir, on the capital market story on both CDSL and upcoming NSDL IPO?
I think CDSL numbers have been quite disappointing, largely because revenue growth has been flat, and I think costs have increased significantly. So I think despite the fact that a large number of demat accounts have been opened in CDSL, I think you could possibly see some sort of traction from these accounts, the incremental accounts which they have opened, possibly in the second half of financial year. And I think markets have realized that capital market stocks, especially CDSL, also is a cyclical business, so it's not a steady compounding business. So you'll have to look at maybe one or two softer quarters. But net, I think the company seems to be good. They've got a decent cash position. They've got a very large position in the demat space because compared to NSDL, it's a significantly large player, and I think largely driven by the retail investors. Compared to that, NSDL, which is coming to the market, is basically a demat depository where large institutions have a much more higher role to cater because they have large institutional clients. But clearly, in terms of valuation, Sakshi, I think there is very little left on the table. So I think investors who expect that they could get a bumper listing, I think would have to wait for some more time. And as far as the unlisted price is concerned, I think this clearly shows that investors or traders need to be very careful on the unlisted market. It's already a 22-23% negative, drop from the official price. So to that extent, I think these investors will be stuck up. They would be definitely be looking at selling the stock on any rise, going forward.
Absolutely. And IPO space continues to be in a rush. 14 companies are to be hitting the markets this week, both in main board and SME, eyeing over 7,000 odd crore rupees as well. So the IPO space continues to be in a thick, demand zone at this point in time. Mr. Gorakshakar, any of the new recently listed IPOs or upcoming IPOs that you are keenly watching out for, sir?
I think we have been telling our clients that IPOs currently at these levels, you got to be very selective because now people who apply for IPOs for just listing gains, I think that trend is now slowly getting over. So Sakshi, we would prefer to buy these companies once they get listed, maybe a couple of weeks, the volume stabilize. Because as of now, I think most of the IPOs which are coming in at a fairly rich to kind of a lofty kind of valuation. So we wouldn't like to comment on any of the IPOs because we are telling our clients to actually look at the secondary market, which would offer better opportunities.
Fair point. I'll come to that aspect also. Let me just quickly get a word from Vaishali as well. Vaishali, 24,800 has been given up right in the beginning of the, market trades today. And we have been slowly seeing a gradual, climb down from the markets. How are you looking at this fresh zone of the Nifty? What does it indicate? How much more downside do we see from here?
24,600 should be the near-term support, Sakshi. So let's see if those levels are held on. Failing that, I think we can see further more correction coming towards 24,300. So for now, I would say 24,600 is a level to watch. And likewise, as I said in Bank Nifty, 56,000 should be the near-term support. So that's how I would look at. But well, I think it's more of a stock-specific market. So focus should be on that and go for small trading strategies for now.
Okay, got that. Let me just take a view on the IT pack again with you, Vaishali. All the stocks are actually trending lower post TCS, talking about a 2% workforce layoff that they're planning over the next 1 year. So TCS, Wipro, Infi, Persistent Systems, LTI, Mindtree, HCL Tech, Oracle, Tech Mahindra, all of them are down. What would be your fresh approach as a trading strategy for the IT space?
So when I'm talking about the IT sector on the whole, if we see the chart, it is 35,500 levels. That is the support level, and that's where we have opened. So if this level breaks, I think this could be a good support and it could be generating a good buying opportunity to accumulate good stocks. But if this level is broken, say 35,500 on closing basis, then it would call for further downslide, which I would think right now, as I'm looking at the indicators and the chartical formation, this is a sign of bottoming out to start accumulating.
Okay, fair point. I hope this has also answered your question well. Let me quickly look at Avinash and come to you also on specific sectors that you are watching out for. Since you said that secondary market is what your focus will be, which are the pockets that are actually giving you that bullish sign to be bullish?
No, I think my sense is, sectors like cement or steel. I think, typically, construction, EPC companies,
Okay.
domestic companies, from the hospitality, from the hospital space, Sakshi, these are sectors which are showing some bright spots. And numbers have also come decent in this quarter. So I think we are looking at these sectors in a positive structural way.
Okay, and any key stocks that have come onto your radar, sir, amidst some of the early earnings that have come in, or where the outperformance has probably struck your attention? Any key stocks that you may have added onto your clients list, sir?
So in the large cap space, we are looking at cement like Ambuja Cements. We are looking at Ultratech Cement. In the hospitality space, we are looking at Indian Hotels. Then, from the hospitality and travel space, we like companies like BLS International, which is into the visa processing business. And more importantly, EPC companies like Nagarjuna Construction, typically, most importantly, even companies like that maybe hospital care like Rainbow Child Care. These are niche companies, Sakshi, where I don't think the inflation impact has impacted the demand. So clearly, I think it's going to be a slow pick and choose approach. I think the markets would give a lot of opportunity for investors to nimble into these stocks at a lower level.
Okay, one stock that we can again look at is IEX, Indian Energy Exchange. Remember last week, viewers, 2 days in a row, we actually saw the stock reeling under sharp pressure. Stock fell by about 30-35%, over a 2-day period. There was some recovery on Friday, but again, the stock is dwindling lower. 8.5% of a cut coming in at 132 odd levels. Despite that recovery coming in from the clarification from the IEX company that came in on the market coupling news. Avinash ji, how are you looking at what's in the offing? In the historical past, we've seen this stock as being a core favorite for investors, a core portfolio stock that was seen as the most stable company to be having. Of course, over the last 2 years, we have been seeing consistent talk about market coupling and how there is a fear of that eroding some of the volumes from IEX, putting it to competitive stocks, and also some risk of IEX losing its business moat of a great price discovery on its platform. How have you looked at the recent developments and what would your fresh approach be?
So I think, Sakshi, it's better to keep away from the stock for the time being, because I think the markets would definitely like to see the real action when this event happens in January 26. But I think definitely it's a negative surprise, and I think this is definitely going to dent their profitability. So we have been telling our clients to stay away. No fresh buying advisable at the current levels.
No fresh buying is advisable at the current levels as well. Okay, before we thank you, Avnashji, we'll take one more comment and then we'll go back to Vaishali to understand some of the key stocks there. We are also looking at, PSU banks, autos, oil and gas, FMCG, pharma index also pulling up in trade. Anything from the pharma basket, Avnashji, that you may probably like? You did point out that healthcare, hospital names is something that you would probably prefer. What about the numbers that have come in for some of them? We've been seeing large OEM players getting their numbers, Dr. Reddy's, Cipla. How are you looking at all of these names?
So I think, to put it in short, we are positive on companies which are obviously having a large US domestic and a domestic base, something like a Sun Pharma or Torrent Pharma, or even a hospital player like Apollo Hospitals. I think these could be good defensive bets in the current scenario. Again, what comes out in the US-India trade policy is important, because this is one sector which is going to be impacted directly by the US-India trade deal. So I think we are slightly cautious, but we definitely like to say that these companies can be added on declines.
Okay, got that. I hope this has also answered a lot of viewers' questions there. Thank you so much, Mr. Gorakshakar, for being with us on the show and helping us with all your broad insights on the markets and various pockets that we have discussed today. Hope you have a good time. We'll see you soon. Vaishali, coming to you. Nearly first 15 minutes of a move can actually be seen on the markets. We are trying to just stabilize ourselves, but at the same time, we're still about 50 points down in trade. What's catching your attention in this space?
So actually, as we spoke, you see, there is some pickup coming in IT sector. So I am looking at KPIT. Then there is BSE, which is showing signs of a bounce back. So also it's a case with CDSL I would have a look at, because technically I think post its results, it's nearing its support levels. 1500 is the support to watch for. I
Okay.
would look at that stock for now. But I think strength and comfort comes in right now IT for now. And well, let's see.
Okay. We were talking about the pharma related space with Avinash. I wanted to talk about the diagnostic space that we did not touch with him. How are you looking at that? Divis had been clearly in focus over the last couple of months, but Laurus Labs is something that's catching my attention. Now, the shares of Laurus Labs hit a 52-week high in Friday's session, but now after the June quarter results have come in, there are many brokerage houses who actually believe that the stock could be actually inching lower in trade. Goldman Sachs, Jefferies, Kotak Institutional Equities, they are negative on the stock, but at the same time they have increased their targets higher as well. They have a sell rating, so that's a bit of a confusion that's coming in from the brokerage houses aspect. In the last 1 month, Laurus Labs has inched up about 18 odd percent. Let's get a view from you on the overall diagnostic space, Vaishali, and Laurus Labs, and some of the other stocks that you could mention.
Yes, actually. So I would say, well, Laurus has been an outperformer compared to the full pack that we have been witnessing. So I would say, well, no harm booking partial profit, because we've seen a one-way rally. Even on the weekly chart, it is quite overbought. So either hold it with a trading stop loss or book partially. And as far as the other stocks are concerned, well, I think whole of pharma sector is quite fairly placed to look into Oro Pharma, Cipla, Lupin, Sun Pharma, and of course, we spoke about Apollo Hospital as well. The other stock which comes to my mind is Alchem Lab. That is technically at a very fair consolidating, and it is at a good support level. So I would say have a look at this stock. This can technically it has a favorable risk reward. So I do like this stock as well currently.
Okay, got that. Let's shift focus to the banking space, Vaishali. We are looking at the private banks lead, inch lower, and that's largely led by Kotak Mahindra Bank. That's now down by 6.7% at 1982 after those weak earnings that have come in, and therefore we have seen some pressure built up on the banking name as well. How would you look at Kotak Mahindra Bank right now, and what would your approach be after the earnings and this sharp fall?
So currently, it is at a make or break level. If I may say so, it is at a 200-day moving average.
Okay.
1980, that is the 200-day moving average. So this level is to be looked into. If this level breaks too, then we can see a further slide going towards 1900 levels. So I think right now it's just a watch.
Okay, got that. What about the other banking names? How are you looking at the entire banking space at large? There are some bright spots like an RBL bank that's inching up in the FNO space. Some of them that are holding up despite this weakness. But overall, understanding on the banking, both private and PSU space?
So, I maintain PSU has not participated, so it's about time. But if you look at RBL also, it's showing new round of momentum.
Yeah.
I would say, well, it's already in a trend, and after a small consolidation at 250 levels, I think this is ready for further run up. Likewise, I do like Bandhan Bank also. Uh, I think good chartical formation. It looks pretty attractive to me at these levels. Current market price is 177. I would say 170 acts as a very good support. And the stock has already shown a one-way trend right from its low of 130 levels to now. It did make a high at around 200 zones. So I would say if the stock sustains at these levels and we see a new round of momentum setting in, this can retest 200 to 220.
Okay, and let's look at the NBFC space. That's actually showing us some good traction. Shriram Finance is the top mover now on the Nifty, 2% higher. Bajaj Finserv is higher in trade by 1.5%. Poonawalla FinCorp post earnings is up by about 4% in the FNO space. That's where the traction is coming in on as well. We are also seeing some names like Aadhar Housing Finance also inch by about 7 odd percent post earnings. So clearly the NBFC space, focused finance space is getting back into some traction. What would your approach be here?
I would say yes, this is also one of the sectors which will continue to do well. So I would say continue. I mean, that there's no damage to the trend. I have a positive approach towards this.
Okay, any top choice here in the NBFC basket?
Well, it's always Shriram Finance. I would also look at Bajaj Finance also. No, I mean, I think it's fairly corrected. So I would look at these stocks.
Okay, got that. Now PSU banks are inching up 0.8% higher. Autos are driving in the faster lane, 0.7% up. You can see even oil and gas that's up by 7/10%. The mid and the small caps are also showing us some traction. Remember last week they had been rather volatile and underperforming the benchmark indices, but you're seeing some move back on the mid and the small caps. Let's look at mid cap winners. Emphasis topping the charts 3% higher. Paytm up by about 3%. You're also looking at Vodafone Idea that's up. SRF, BSC, Indraprastha Gas, a lot of oil and gas related names that are actually inching up higher in trade as well. Let me also look at some of the names on the small cap basket that are making some traction. We've discussed Aadhar and Poonawalla. Laurus is up. We've also discussed that one. Inox Wind is higher by about 2.5%. You're also looking at Titagar, HFCL, Scient, Delivery, Swan Energy, right? So some railway related moves also coming into focus within the mid and the small cap aspect as well. What catches your attention in the broader markets, Vaishali?
I am looking at Reliance actually, first of all. I mean, that is one stock which has shown good corrective move, technically well placed. Then, as you said, Paytm, of course, I mean, that's holding on to the support levels and it's getting ready for a new round of momentum. So, that is another stock to my liking. These are the few stocks that I would be focusing on. Then there is HAL, that is showing strength after a good corrective move. So, these are good quality stocks which one can consider. Max Financial holding on well. That is doing well. So that is another stock to my liking.
Paytm, what's your next target? 1103 right now, 3.5% higher. It's been gaining some traction since last 2 weeks.
Yes. So, Sakshi, I think 1150 to 1200 would be my next positional target.
Okay, let me also look at the broadest index, Nifty 500 names, what's ticking higher here. Paradeep Phosphates is up by about 4 odd percent. You also have names like Pondy Oxides that's higher. Omax Limited is up, it's been seeing some traction over last week. Orient Cement, Swan Defense is also higher. Indo Solar is another one that's also up in trade. Work hard, we've already marked out for all our viewers. That's how some of the Nifty 500 names are also inching up in trade. Anything within the chemicals, fertilizer pack, Vaishali, that you still like?
Well, I think UPL is surprisingly that is doing well. It is sustaining at higher levels. It's consolidating. So I think this stock can be looked into. 710 can be the near-term support, broad-based well 700. And then I think if this momentum continues, this can go towards 740, 750.
Okay, got that. I hope this is also given some sense to all our viewers. But Tata Motors from the auto pack, how are you looking at that, Vaishali? Today there's a 1.5% uptake. Now with these fresh trade deals that are being signed with the US, Japan already happened in the last couple of weeks. Then now there is EU that's happening as well. All of that is bringing focus to Tata Motors because of its large exposure of JLR in the US market. How are you looking at that?
This stock has unfortunately been always been a laggard, but technically a long consolidation taking place at 670 levels. So if this support is held on, I think this can go towards 750 to start with. From there on, if it sustains, then it's ready for higher targets. So that's how I would look at this stock.
Okay, let me just bring up from the real estate pack, that's the top losing index, and we've discussed real estate so widely with you, Vaishali, that we must mention that 3% of a downtick is coming in on the real estate pack, and it's severely under pressure in trade today. Of course, led by a lot of stocks that are inching weaker. We can see a Lodha Developers, that's Macro Tech, that's the top loser now, 6.5% lower. This is despite net profit jumping 42% for the company. That's also despite the margins coming in higher, EBITDA improving and revenue also improving for the company. But you do see sharp losses on the company. Prestige Estates about 4% lower, Oberoi Realty, DLF, Godrej Properties that we widely discussed with you, Sobha, all of them are coming under pressure. What's your overall outlook on real estate pack?
I think they have done good run up all this while. So a little bit of profit booking cannot be ruled out. So even around that, let's start with DLF. So it has broken its near-term support of 830 levels and all. I think if this corrective move continues, this can go towards 770. So for now, I think most of these stocks are getting into profit booking. So it can be a miss right now. And to those who are holding, should book partial profit.
Okay, on Lodha Developers, especially, what will your reaction be after this 6.5% kind of a drop coming in? How would you look at Lodha?
So the trend is really damaged compared to the other stocks, and I think this can go towards 1150 or so. So right now it is a strong bearish candle, so I would say it is with a corrective bias.
Okay, Lodha could be correcting. 1150 is the lower target that you could probably be looking at. A bearish move can continue on Lodha beyond this 6% move as well on the downside today. Oil and gas for you, that's also taking higher now, Vaishali. Any suggestion on what would you do with the oil and gas names now? 0.7% up.
Well, so as we spoke about first about Reliance, so I think that can be a good level that we are talking about. The other one, ONGC, also is showing a bit of a strength. So, but these stocks have really been a laggard. I mean, to those who are enjoying the uh, dividend and all, it's fine, but we hardly get any trading opportunities. I would still look at oil that has held on to its trend. So, Oil India can show us a good range. So right now we are looking at 430 support to 470 as the resistance. So these are the stocks which take its own time to really show some rally.
Okay, fair point. I hope that has also helped you out in understanding what your key thought process should be around this space. Let me come to the Nifty next 50 names. A lot of Adani Group stocks are also buzzing. I think Adani Enterprises also among the Nifty was a top mover, and Adani Green Energy is now up 2%. Adani Energy Solutions, Adani Power is also hovering higher in trade. Any fresh move in the Adani Group stocks that you would like to track?
So well, my focus always goes, it starts with Adani Port. So I think this also 1350 is a very good support. So a good level to consider this stock, because I would look at 1350 as support, and if the stock moves above 1450, 1460, it's ready for a target of 1500 and higher. So, and it's already in an uptrend. So I do like Adani Port, but we talk about Adani Green, etc. They're already consolidating. It's a matter of time. If this has any inherent strength, it's time to show higher targets.
Okay, got that. I hope this has also given you a broad understanding on this one as well. We are also looking at some other moves. Acme Solar is up sharply high, about 7% up. I think this is after the earnings that came in, revenue uptick of almost 71% or profitability surging to 131 odd crore rupees, profit margins also jumping substantially for the company. Acme Solar Holdings, have you been tracking this one at all, Vaishali? What would you do post good set of numbers and the reaction?
Well, it shows strength. Today's candle has reversed the trend. It needs to maintain its today's low. It opened with a gap up also. So I would say keep 280 as support level. And in all likelihood, the stock can go towards 310 and higher.
Okay, got that. I hope we've got an understanding of that. We haven't touched base upon the favorite space of ours to track, the new age tech space, especially the food delivery giants, Eternal, Swiggy. Let's see, how that one is moving in trades this fresh and new week. We've been seeing last 1 week, entire focus was on this space, 309 for Zomato. It inched up to record high levels as well post earnings. Swiggy also was piggybacking on the kind of buzz that, the kind of results that Zomato posted, especially on the quick commerce space as well. How would you look at both Swiggy and Zomato right now, and what would your fresh strategy be here?
No, well, Zomato, I mean, Eternal now it is called. It is already given a weekly breakout. So I would say, and this had given us a clear indication at 240 levels because overall we were looking at this stock, this was doing always doing well. So even right now, I still continue to have a positive bias because in a market like this where there is so much of volatility, it's still holding on at higher levels. So I guess it's a buy at every dip, keeping in mind 280 should be held on as a good support level. And in times to come, we can see 330, 350 levels.
Okay, fair point. Thanks a lot then, Vaishali, for being with us on the program and helping our viewers
Pleasure.
out with all the key strategies on the markets. Viewers, it's time to shift focus to our earnings corner, and the earnings that are in focus as Jammu and Kashmir Bank that reported about 16.6% year-on-year increase in the net profit at 484 odd crores. Profitability, in fact, when we look at the NII, that was also up by 7%, coming in at 1465 odd crore rupees. We've also seen the gross non-performing assets standing at 3.5% in the June quarter against 3.37% in the March quarter. So slight uptick there. Net NPA came in at 0.82% versus 0.79%. Again, a marginal increase on that front. Although the return on assets for the company grew by about 1.17% from 1.08% in the same quarter last year, indicating better profitability. The net interest margins, however, have declined sequentially to about 3.72% from 3.86% as well. Let's welcome the top management of the company to help us understand and to decode the earnings as well as help us with an outlook going forward. Mr. Amitabh Chatterjee, he's the MD and the CEO of Jammu and Kashmir Bank, and he joins in on the program with us. Warm welcome to you, Mr. Chatterjee, and good morning to you. Thank you so much for taking the time out for this conversation. I'll start off with your overview on how have you assessed the quarterly earnings for you. Remember last time around when we had been discussing, we were trying to understand if there was any kind of an impact of the Pahalgam attack that happened, and I wanted to understand, from this quarterly update, could you give us a sense of was there any impact that you assessed on the balance sheet?
A very good morning, Sakshi ji. Of course, if I have to first answer the question related to the Pahalgam attack, the way tourism impacts the GDP of Jammu and Kashmir, it is obvious that it has had an impact. It has impacted tourism quite a bit. Even now, I mean, if I look at yesterday's hotel bookings, it's not that good. But then there have been a few events which give a very positive outlook on this. First of all, the starting of the Vande Bharat Express and then the Amarnath Yatra. All these are indications of things coming back to normal, and I believe that it is going to be normal very soon. As far as its impact on the bank, if you look at, you mentioned the NPA slightly going up from March. Even the SMA 2 has gone up little over March. That is on account of the delayed payments on sector. See, it is not only the tourism. There are a lot of other sectors in Jammu and Kashmir which indirectly depends on the tourism. So a slight impact has been there, but again, very likely that the state would announce this geography as a disturbed area, and we will
Yes.
be able to implement the master circular of RBI on refacement of the accounts. So next quarter, I believe it should be much better.
Next quarter, it should be much better. Help us understand with an outlook on the margin, sir. How do you see and what do you end the this financial year with, FY26, sir?
See, obviously, after the repo cut,
Yes.
all the banks have been impacted on the margins. We have an advantage, I must say, that we have a 45% plus CASA. So that protects our margins quite a bit. So that is the reason I had initially also given a guidance of margin of around 3.6 to 3.7. I will stick to almost around 3.6 for the year end this year. As we are also working on improving our CASA. There are certain steps that we have taken, especially on the IT front, which will help us getting a little bit of more CASA going forward. So I believe that margins will be somewhere around 3.6 to 3.7.
Okay. And on the asset quality, sir, is the impact going to be limited to first quarter? Could it extend to the next quarter? And what is the kind of expectation on both GNPA and NPA, sir?
See, the GNPA guidance that I have given is 3%, and definitely we are going to be at 3%.
Okay.
There is a lot happening which should have happened in the first quarter as far as high recoveries are concerned, which did not happen. So they are going to come going forward. Some big accounts which have been resolved, the repayments are likely to come this quarter. That is one. And the second, we have created a different structure in the bank to take care of NPAs. For example, the branches will be freed from NPAs and they will be parked in separate branches. If you are aware of the way it is handled in SBI, this stressed asset group. So we have also
Okay.
created a group, and it will be exclusively handled at these branches. So I believe that with the focus that we'll have on NPA recovery, the NPAs are going to come down. It has come down substantially in the last 2 3 years. It is still going to come down.
Okay. Sir, a large part of concern for the entire industry in this quarter has been talked about as the rising cost of credits at this point in time. What is the scenario at J&K Bank and how do you see it going forward, sir, credit cost?
See, over the last 2 years, there have been provision write-backs. Uh, I believe there is going to be a similar kind of a condition in the second or the third quarter. First quarter we didn't have, but the slippages have always been less than 1%. So I don't look at the credit cost going below 1% for this bank. I mean, if you look at the history, it was almost negative for the last 1 or 2 years. So it may not be negative, but it will be largely contained by for this bank.
Okay. And going forward, what is your outlook on provisions and what is your expectation on any fresh slippages, any concerns there?
Nothing major. I am not looking at any major slippages going forward. So the provisions will remain at the level that they are, and we have
Okay.
sufficient cushion available.
Okay. And on the deposit side, sir, with the cuts coming in, like you pointed out on the rates front, what is the outlook on the deposits front, sir? It has risen for this quarter for you. What exactly is the outlook?
See, there are certain steps we have taken specific to this bank because of the maturity profiles in this bank. So that is the reason our cost of deposits slightly has gone up from March quarter. I think it has gone up by 3 or 4 basis points. But then,
Okay.
going forward, there I told you we are working on the improvement in CASA as well. So I believe that the 10% guidance that we have given for deposit growth for the year, we are going to achieve that.
Achieve that. Okay. On the loan book front also, sir, if you could help us understand what is your expectation and what is it currently at?
See, this particular quarter, we were a little bit conscious on not taking exposure in very competitive, I mean, sectors. I mean, the companies where they demand a lot of competitive pricing because of obvious reasons. But going forward, the kind of retail growth that we are looking at and we are witnessing already within J&K and outside. So I believe on the back of a strong retail performance, the guidance of 12% is definitely going to be achieved, and it will also be supplemented by some sort of improvement in the corporate loan book. So I am very confident that we are going to achieve 12% and maybe more than that.
Okay. Sir, what is the current split between retail and corporate, and how do you intend to, progress that going forward?
See, retail, our major exposure has been more than 80% is retail.
Okay.
If you consider the small agri loans also,
Yes.
so it is more than 80% in retail. So corporate loan book, what we have is all AA and above rated companies. So we take little exposure in corporates because of obviously in the past the capital position was not that good. Now that we have fairly good capital position,
Yes.
going forward we might do some diversification.
Yes, your CAR stood at a healthy 15.98%, sir. Will you be okay with maintaining it here? Is there a scope of improvement?
15.9 hit is without including this quarter's profit.
Okay, okay,
So
okay, wonderful.
obviously our target is going to be somewhere around 17.5 to 18% by the end of this year.
Okay, wonderful. Now, when we talk about the retail books, so you're talking about the rate cut scenario. Is that going to probably, increase the demand on ground for retail? What is your expectation on the rate front going forward from the RBI as well? We've already seen some big ticket cuts that have already happened. What is the expectation going forward? And how much have you passed on also, sir, if you could help us?
See, 52% of our loan book, retail and corporate included, is linked with repo.
Okay,
So we have passed on almost everything.
okay,
Uh, we have not had a major shift in the MCLR book because we were already lowest in the industry as far as MCLR is concerned. So as far as passing on is concerned, it is already passed on. So I don't see major income deficit coming out of this in the near future unless there is another cut,
okay.
which again I think is quite likely.
It
Looking
is
at
quite likely. Okay, got that, sir. Thank you so much, Mr. Chatterjee, for being with us on the program and helping us with all your views on, the current quarter, and all the very best to you for the upcoming quarters. We'll definitely catch you soon on the other side as well on Business Today Television. Always a pleasure to have you with us, sir, on the show.
Thank you very much. Thank you very much. Thank you.
Thank you so much. Viewers, we hope that you've got an understanding of how J&K Bank has performed in the earnings and what is the company's outlook going to be as far as Empire 26 is concerned. They are confident of maintaining the guidance that they have given out for NIMs as well as for asset quality, for deposit growth. They are actually confident of even the rate cuts going forward, as therefore increase in the demand as far as the loan book is also concerned. So thanks a lot for joining in on this edition of Market Today, viewers. I hope you've got an understanding of how the first half an hour, 40 minutes has really panned out in trade today. 24,800 is back with us. So despite very high volatility, we're trying to come back above 24,800. Let's see how this really pans out in trade. But it's not a very good start for this fresh and new week. Concerns emerging on a lot of earnings front, on sentiments as well. And that is keeping the lid low as far as the move is concerned on the markets. Let's continue to help you understand how the broad view of the top market experts is on the markets front. So stay tuned with us throughout the course of the day. Many more earnings conversations and of course answers to your questions on daily calls will come in at 12 noon. So stay tuned for that too.
It all started with just one picture, followed by a call to action echoed by a 1.4 billion people.